Good evening, everyone. Today I'm going to discuss the 3 trades I took today on Nifty 50. So if you are in the Telegram channel, I have shared all these trades live with proper explanation. Yeah, but I will do a video today to discuss exactly how I took the trades and why I took the trades. So let's get into that. So yeah, obviously my entry models, mm, yeah, before a trade, I need 3 confirmation. First is a bias, then a point of interest, then an entry model. If all the 3 boxes tick, then only I take a trade. So yeah, let's get into the why and how I came up with the levels. So most of the days I trade ledges, poor high, poor lows, and all that stuff. But today's levels were based off just previous day high and low. Nothing complicated, just high and low. So these are we all know, open, low, high, close are always an important level. So that was the idea. So yeah, we got high and low. So I was looking for trade entries once we breached the day low and previous day high. So let's get into that. So this trade was taken at 10 a.m. So yeah, at 10 a.m. then yeah, basically I trade absorption. So how do I identify absorption? So let's get into the charts. So this is go charting, and yeah, so here yeah, the yeah, around 10 a.m. candle. This was the candle which gave me confirmation. So yeah, basically we've had a B structure. I trade B and P's. I will cover this in detail in future videos, what exactly these are and how to identify this. So once we've reached the previous day low, my idea and thought process is to get back into the day and look for long entries. So this was a point of interest we already got. We already have a bullish bias. Now there's entry model. It could be anything. Yeah. So we say an absorption. Absorption, like pink means sellers are getting absorbed. If you have the default settings, it will be red. So yeah. So once I saw absorption, I decided to take the long. And the second entry was around after we breached the previous day high. So same logic. Then the third trade was the first fair value gap we created after this breach. So let's get into the charts. So once we got there, here the same reaction, we got absorbed, and I took the entry. This wasn't the perfect and best example to trade. So I trade entered somewhere here as absorption happened. Then I saw sellers entering. Then also we have a trade book here. Once you see, set a default filter. What do you want to see? Usually my filter is set around 1,000. So whenever there is an order executed above 1,000, it gets printed here. So if there is a series of that, I look for I consider it as an active interest of that side, be it sellers or buyers. So once I saw absorption and then I saw sellers getting interested, I entered the short. This wasn't a great confirmation for me, but it was still my entry model. Everything matched, so I took the trade. And then we made our first fair value gap. Yeah, this was our first fair value gap. And then when we reached here, yeah, and I also mentioned in the group, we were doing low volume. You see, till this point, there was a average of more than 50K. And then we saw the low volume. And this made me nervous. If there's low volume, it can get volatile. So I gave a bit freedom for the stop loss. And when we reached the fair value gap, we saw the same thing. Yeah, buyers getting absorbed. And then I took another short here and then carried the whole trade to my high hit rate levels, which were down here. Basically, I trade edges to edges, like what they call external liquidity to external liquidity. That's all I trade. So absorption, point of interest, and bias, all these three things.